What's up everybody? Welcome to the channel. Well, welcome back if you're already subscribed. If you're not, please do hit the subscribe button, hit the like as well as the notification bell so that you can get up-to-date notifications every time we upload new content, as well as when we spread information. As well as please check us out on our other social media platforms on Instagram, Facebook, under the tag Vukasakhecapital. I'll have it listed somewhere here, as well as my personal one, Masonwabet. This is where you can be able to communicate with me directly, as well as to get up-to-date content and notifications every day into what we're talking about. When we share financial information, you can get more access to it. So anyway, I just want to quickly welcome back everybody who's here and apologize for the lack of content on this channel. Obviously due to the pandemic, things have had to slow down and we've had to reassess how we're going to be handling this channel. So everything is put on pause. Everything's still going to be happening. There's a lot more planned in the future, and as things progress, I'll let you guys know. I want to first say I appreciate the support. I appreciate you guys being here and being patient with me, okay? Also, please do check out the other channel connected to this called Hustle and Motivate. That one is more structured towards motivational videos. Matter of fact, I'm going to be recording a second session as soon as we're done here. So please check it out on that channel. I'll have the tag listed down below. And yeah, I hope you enjoy that. I'd like to disclose that any information that I share with you guys is purely for empowerment. I'm trying to reach as many people in our communities, as well as your neighbor, yourself, and everybody around you, trying to share information that I believe should have been taught at school, but due to lack of exposure and how the system is run, a lot of people haven't had access to it. Things that I believe are general knowledge for some people, but other people, they don't know anything about it. This should not be construed as financial advice. Before you make any financial decision, guys, please speak to a person who's regulated under FSCA. That's the Financial Services Conductory Authority. Conductory Authority? FSCA. We just keep it like that. Guys, anybody who gives financial advice should have a license issued by this organization in South Africa. So every time that you're about to make a decision, I advise you, please consult a financial advisor. Okay? Financial advisor isn't there to try and make you rich. That's an investment manager or investment advisor, whatever. That's a specific category of financial advisors. A good standard financial advisor is there to help you get structured. So like they're there to basically lay out the pillars and the foundation for you to live a comfortable life, right? They can help you with your taxes or send you to a tax consultant, help you get the right idea and information in how to structure your life policy, your insurance, your assets, and everything else. Okay, so I just wanted to make that quick disclaimer because a lot of people in our communities have been taken advantage of due to Ponzi schemes and get rich quick schemes, because people just don't know. They think that this person has the authority to talk about finances when in reality they don't. That's why on this channel, we're not selling you anything. This channel is purely for information. We're trying to empower people by giving them the basic, because I believe the more number of people have the basic understanding of money, the better our communities are going to improve. And this is not a means for me to try and make money off you. I'm good. But it's more or less to reach more communities, as well as to share information and empower everybody so that everybody can get financially active, especially during these hard times. Whew, that's a mouthful. Anyway, let's get to today's video. Now, as the title suggests, today we're going to be talking about assets. Now, everybody who knows anything to do with finance knows how assets are important. The first thing you should try to do when you're trying to create wealth for yourself or trying to lay a good financial foundation so that you can reach your goals, your financial freedom and targets and everything, is to try and have as many assets as you can. In this specific video, we're going to be talking about financial assets. And we're going to be going into, not in depth, it's just going to be broad definition and understanding into what they are, what they represent, and what they mean, right? So there's different types of asset classes, meaning different types of assets, financial assets that is. And these are utilized for different purposes, and I'll give you just an understanding of what they are and what they represent for the market, okay? So first things first though, we need to understand what an asset is. Before we talk about it, we need to know what we're dealing with. Because there's many people who be like, oh, I don't even know what an asset is. Okay, an asset, guys, basically is anything that you own that is of value, that is bringing in income. So if something is making you returns, meaning a little bit of money, can be a little bit, can be a lot, but anything that's making you money or has money coming in certain time periods, it doesn't have to be on a regular basis, but something that's going to be bringing in money is considered an asset, because this thing is something that is under your control and is doing work for you so that you can get a return out of it. So every time you're trying to build something solid, anything solid like a business or just your personal wealth and your income, always try to purchase as many assets as you can. Try and accumulate as many assets as you can, so that your residual or your passive income can grow every year, every quarter, every month, every day. Just try and bring value to your life, okay? This is what's contributing to a person's net worth, meaning the overall value of what you owe after taxes. Taxes. We'll talk about that in another video. So anyway, let's get into the first asset. There's so many names for it. I don't even know what to call it. Dough, Mula, Guap, Chankura. It's my favorite Joburg people. Zaga. There's so many names for it, guys. I don't even know where to begin. But basically, cash. Cash and cash equivalents is an asset class, and it's the one that everybody utilizes, everybody knows about, because it's the most liquid. By liquid, I mean it's the most easy to exchange for goods or services or anything in return, because everybody accepts it, everybody knows it in a specific country, and there's a going rate on its value, okay? So when you have cash with you, it's a type of asset. So when people talk about, I've got so much reserved in cash, that is how much they're holding. You can have it in a savings account, you can have it as actual cash on you, but basically it's a type of asset simply because of its ability to exchange. Things that affect cash is inflation. Inflation is the decreasing value of cash itself. So take for a good example, the cash that you had a year ago, let's say you had 2,000 rands, and the 2,000s you have now can get you less based on inflation. So the higher inflation goes, the lower the value of the rand, or the lower the value you can get per rand. That is the market inflation, is the buying power of a single rand. So whenever you invest in anything, always be aware of something called inflation. Inflation is the decreasing value of a rand or of an asset. Anything that decreases its value means that there's been an increase in inflation. Guys, when you start to understand and you invest in such a way or save money in such a way that you have assets that outperform inflation, then basically you're good, okay? That should be your base target. Anything that you put money into, when you have cash, if you're holding cash, it's always going to go down. Well, not always, but on a regular basis, it goes down simply because inflation and the standard of living increases on average per year. So therefore, cash tends to decrease also at a certain rate in South Africa and around the world. So holding cash for a long period of time isn't advised. Holding cash for a short period of time, obviously for its ability to exchange, is advised because it's the easiest way to get things done. And when I say cash, I don't always mean like tangible cash. When I say cash and cash equivalents, I mean also cash in the bank account. So in your not checking account, what's this? In your deposit account, savings account, whatever, you know, those are good for everyday swipes and, you know, living expenses. So that's the first asset class. Cash and cash equivalents, its pros and its cons, is that you can basically, it loses value depending how long you hold it due to inflation. But as well, the pros of it, the big pros of it, is that you can exchange it quickly and get returns on it for, like, you buy something, you get it now. So it's quite liquid, okay? Now, the second category, guys, I'm going to be talking about is obviously real estate. Like, there's no video talking about financial literacy and talking about assets that cannot involve real estate. By real estate, I mean obviously like property. Property is an asset class that is recognized all over the world and by most people who are wealthy. To be honest with you, it's one of the most, I don't want to say safe, because safe is a very, it's a deep word, but it's one of the most consistent ways of building wealth, simply because people inherently will always want a place to live. You need a place to live, you need shelter. It's one of those basic needs that have to be serviced, right? So whether you're buying property or renting property, if you own property and you sell it, you make money. But if you own property and lease it, aka rent it out, you're making, income. Now, this is a very, very important asset class because it basically lays the foundation of something tangible that can be pointed to into ownership, right? Because once you have an asset like real estate to your portfolio, to your name, you can be able to get basically capital on it by reinvesting back into it and then selling it. You can also increase your net worth value depending on the value of the property or real estate that you have. Also, you can get a bond which can be able to be used as leverage to improve your credit. There's just so many pros to real estate that I can't really hype it up. As the channel progresses, I'll go more in depth into real estate because it's very intricate and people will talk about it, but they won't tell you specifically how to get involved into it. I'll go into more detail about how to purchase a property, how the process happens in South Africa, what you should be looking out for, interest rates and stuff like that. Things that I've gone through, things that family friends have gone through and have witnessed from clients and everything. So we're gonna go more in depth with the videos about what real estate is, because I know a lot of people have a lot of interest into real estate. So we need to really talk about it, okay? Number 3 is obviously equities, guys. Now, equities is one of my personal favorites because I am a small business owner and it's one of the easiest actually to go into when you have little money. Equities in basic definition is owning a part ownership into a portion of companies or company, because there's different ways to go into equities, right? There are things such as individual companies which offer shares. So shares on the JSE, you can look at companies like Sasol. There's so many. There's Remco, there's Pick and Pay. There's so many companies listed on the JSE that you can choose individual companies, which is one way of doing it. Another way of doing it is investing into things called indices. Now, indices are more technical because indices are basically tracking instruments of certain number of companies. You can obviously do research into the different kinds of companies involved in that portfolio. Imagine, let me make it a simple example. Let's say you go and purchase an index in the top 40, JSE top 40 performing shares. That is one, basically a bag full of different small portions of companies. As the name suggests, it's the top 40 companies in South Africa on the JSE. Different portions of it listed in there. That's just to diversify risk and to make sure that you don't put your eggs in one basket. I'm sure we've all heard that expression. So when you invest into that indice, anything that happens when it goes up in price, you make money. When it goes down in price, you lose money. I'll give you my personal opinion. If you're gonna be looking for short-term returns, don't go into equities, because I believe you can make better returns if you look at it long-term. Now, there are people called traders and there are people called investors, and we'll make a video about it later on where it's traders versus investors. We'll be going back and forth about what these people are and what they aim to achieve. But basically, my advice, just if you're gonna go and look at equities, try and look at the long-term perspective. Don't try and ride the waves. It's just less risky. So anyway, and then there's also a wonderful category called ETFs, which are electronically traded funds. These are also tracking indices. It's like similar products where they have different things compacted into one bag. It's like you get everything in one, so that you diversify your risk and mitigate any kind of problems that you might have in the future if one company goes bad and one company goes amazing. It balances you out. Now, the ways that you can make money off equities is definitely through a thing called dividends. Dividends is proportion paid to the owners or the shareholders, depending on whatever cycle they go on. It can be declared every year, every quarter, or whatever. That if they make so much money that they like, yo, we can give it back to our investors, our shareholders, then you make some money. If they choose to hold on to dividends and reinvest back into the business, yeah, again, this is for your benefit. So as I said, this is why it's better for long term. Look at companies that are better for you financially, long term perspective. Okay, always do your research. Always check into what, if you're going to be going into ETFs and indices and such like that, and other tracking indicators. Always make sure that you know what's in it, so that you know what you're investing into, just to protect yourself. There's also private and public equities. So the public one that I was talking about is all these things. So the JSE, ETFs, and all these things that are for the public, anybody has access to. But then there's also private equity. Now, the reason this one is private is because it's like purchasing shares of a private company. This company isn't listed on the JSE, so nobody knows what its true value is except the own shareholders. So whatever you guys agree to, that's the value of it, okay? Sometimes you might make a good deal, sometimes make a bad deal, because it just really depends on the company that you're buying yourself or buying shares of, okay? This is why research is very, very important. I cannot highlight it enough. Yeah, number 4. Okay, I feel like I've been talking for a while. We're almost done, guys, I promise. Just bear with me. Number 4, we're going to be talking about bonds. Now, when you hear the word bond, you must be thinking, obviously, a house. But to be honest with you, a bond isn't a house, because maybe it's just me, but the place that I grew up in and the people I grew up around always referred to, I need to pay my bond. I need to pay a bond. And growing up, I always thought that a bond is a house. But no. A bond is, as the name suggests, union, tying up of things. I'm not talking about marriage. Basically, it is a marriage though, but I'm not talking about marriage. I'm talking about an agreement between two people where debt is involved, meaning one person owes money to the other person. So bonds are usually guaranteed by the state. This might be a little bit more complicated. Let me go deeper. Bond in itself is just a debt instrument. It's an instrument, an asset class that tracks and measures bonds. The government issues government bonds. Now, government bonds is the amount of debt that the government owes. You might be wondering, to who does it owe to? It owes it to us. So like when the government is trying to raise money, they issue bonds. They are selling government bonds. Usually this started at least 400, 300 years ago. During the war times, when countries used to go to war and they needed money for ammunition and all these things. So they started issuing out bonds, saying that the public can contribute to the country's betterment by giving us a portion of their money. So they purchase government bonds. This is a debt saying that the government, once the war is over, everything is fine, they're going to start paying them back. So they're going to get money back due to the amount of bonds that they purchased. This is technically an asset class, because if a person owes you money, they are your asset, because you guarantee whatever you have according to how much that person owes you. So if you owe me $100, I'm going out living my life, knowing that I've got 100 rands that is guaranteed by you. The reason why bonds are seen as a solid asset class is because it's backed by the government. Now the government, obviously, we don't want the government to fail. Well, I hope it doesn't fail. So the more solid the government is, the more the government is performing at a good level, meaning that it's more well performing in its JSE, the economy of it is flowing. There's basically stability, political, environmental, economical stability. Once there's those factors in play, then the government is able to pay those bonds, pay a proportion of it, so people can transfer bonds, sell bonds, move bonds. Those are government bonds. Then there's private bonds. So if bank owes someone, they sell bonds to each other. A bank needs to raise money, they sell a portion of their bonds. People buy bonds saying that, okay, I own this debt instrument, meaning that whoever this bond is attached to owes me money, right? So that's basically what bonds are. Bonds are a debt instrument that is technically an asset class because whoever owes you money is an asset to you. You're a liability to them, but they're an asset to you. So anyway, we're gonna go, as I said, we're gonna make further videos going more in depth into the history and why it is the way it is. Okay, so please be patient. Number 4, we have commodities. Now, commodities, guys, are there's a difference in commodities. You can either own physical commodities or you can own the financial instrument of commodities. I'm going to be talking specifically about the financial instruments because when you purchase commodities, financial assets, it means that you invest your money into the value of those commodities. Now, what are commodities? Commodities are minerals, metals like gold and diamonds, and also crops like wheat, livestock like beef. Basically, it's like that industry, the raw industry, being tracked and well as being quantified. So on the JSE, as well as it's being tracked all the time. I'm sure you've seen in the financial markets that they list at the back commodities. So you can invest in that as well. It's an asset class because it tracks the performance as well as the price range of it. Now, commodities usually don't go according to what that economy is going through. Like if South Africa is in a problem, like everything's going like haywire like it is right now, gold isn't necessarily affected just because South Africa is involved. South Africa is a huge contributor to gold because we have a lot of it, but we aren't the only country in the world that utilizes gold. So commodities tracks the overall market across the world. So it's another asset class that people use to diversify by putting money into it, locking their money up there if they're like, I don't know what's going on in my country, but I want to make sure that, it's safe. Things are flowing and it's being tracked usually by the American dollar. So the price range of it is affected by a bunch of a global market. So yeah, commodities. It's a wonderful, wonderful asset class because it does its own thing. It basically can have attitude. Nobody can say anything about it. It's fine. And also, lastly, well, for this episode is going to be Forex or foreign exchange commodity. No, not commodity. It's going to be foreign exchange currency. That's the word I'm looking for. Now, this one, a lot of people have taken advantage of recently. People think that you can make a lot of money in Forex, which you can, technically you can, but then you can make a lot of money in anything, any of these asset classes. But more people have been taken advantage of because they simply believe that this industry is a get-rich-quick scheme. But to be honest with you, Forex is nothing but tracking currency differences between countries. So the rand compared to the dollar, how it's performing. People buy a portion of either the rand or the dollar, and whichever one goes up, they make money. If it goes down, they lose money. So owning foreign currency is just beneficial if you know what you're doing, because the factors that go into another foreign currency are not always correlated. So it's not always the thing that you expect that can hit you when it comes to another currency. A good example of this is, it can be political, it can be environmental, it can also be social. So all these factors, if you don't know what you're doing, you're gonna end up losing money, or you're gonna end up giving your money to someone who doesn't know what they're doing, but they speak nice or have a good attire and they dress nice, nice cars and everything. Usually they attract people who aren't educated, right? So whenever you're gonna invest into Forex, please, as I said in the beginning of the video, speak to a person who's FSCA approved, who has a license for it, as well as a person who can explain to you why specifically they're purchasing these currencies. I feel like it's very important that people have these conversations with people who manage their money, because if you cannot explain it to a child, I don't believe you know what you're talking about. Like, if you can't make any of these asset classes definable, I don't think you have any right to be advising someone else about it. Because if you know it fully, you can make it as simple as possible. It might be intricate, which is why we're making sub videos for all of these asset classes. but it's very important that you understand the overall perspective of what assets are, what financial assets each category is, and what they mean. So we're going to be making more in-depth video. So anyway, thank you guys for listening to me for so long. Like I said, we're going to be making more videos concerning all of these things. We're going to be dealing with them, tackling them as a people, as one. Please do hit the subscribe button. Please like, please share. Check us out on our platforms. I'll put the tags where you can find me on social media, on Instagram, on Facebook. Check out the other channel, Hustle and Motivate. We will be talking as well about the shift of mind and to motivate people to be more active into gaining financial freedom by being more savvy, as well as being motivated to put in the hustle, basically. Once again, I appreciate the support. I appreciate you tuning in, and I'll see you on the next video. Cheers.